I'm gonna start the recording now then, I guess. Mac OS properties, regular Mac OS properties, display capture, built-in retina display, LCT. There we go. Okay. Start the recording. Alright, so now I'm recording. I assumed that I'm recording already, but that's okay. Where are my AirPods? There they are. Put in some chill music. Testing the 15-minute inversion fair value gap apparently. Stop is protected at break even. doing, but well, hindsight. Break even, it's not a loss, so we did good. $6 negative because of the commissions. $3 round trip per contract. My first stop loss would have been hit. 1 point right here at this high. The other stop loss would be sitting here at 1.5 points, risking 2.5 points in total based on these two entries. Just from experience, when we get a pre on an open entry and I do not protect my my short basically, or my long position, like I did just here, let's say 2 out of 10 times it gets into our stop loss area, puts us into drawdown again, and without hitting our stop loss. So like it moves in here and then it still continues lower. I don't want to try to hold anything against the London Open bullish momentum. If it's already showing me signs that it doesn't really want to continue lower and is pushing up higher, most of the time it just doesn't stop for any of that pre-London Open low volume structure. But this might be one of those rare times where just run some stops. But yeah, our magnets didn't work this time. A very bullish 1 minute fair value gap. Let's see how this 5 minute candle is going to close. NQ is also showing some strength. EU is also pushing. This 5 minute bearish fair value gap where we got our initial entry short into this, call it support area, equal low sell side. Volume imbalance close above the bearish fair value gap, so let's move this to the right here actually. Inversion fair value gap on the 5 minute. We just retested that. This would be a break-in structure right here. Break-in structure. Tested the fair value gap, the inversion fair value gap immediately. I want to wait though for the 15 minute candle close if I'm trying to chase anything here. Tap the midnight level again, back below the inversion fair value gap here. one of those rare times where we move into drawdown and do not take out the high. Instead, have to take out the high and still delivering to our targets. That's why I like to wait for the first 15-minute candle. And Q hit the midnight level as well. And started to pull back from that area. Most of the time, if 2 AM opens up and offers a entry opportunity, it's one of two. So either we're gonna have a super small range, 3 points and a quarter right here, or we're gonna see something like we saw it yesterday, right here, where we just sell off without giving us an entry opportunity, and then we actually run 2 AM right here until London Open. We moved a total of 11 points, but without really giving us an entry except for a volume imbalance entry. Let's clean up the chart from yesterday, but leave the trades on here. Our order block, bullish heavily gap London long. Equal lows, bullish heavily gap entry right here. Session I ended up taking another trade right here of this bullish valley gap because I saw some SMT divergence within Q into my side, past a 50k challenge with that. Now it's micro expansion time. Okay, so 15-minute candle closed. Take a look at that. We closed above our inversion fair value gap that we earlier tried to use to frame a long. We see that the 15-minute open up with a bullish, with a bullish volume imbalance right here, just not visible to us on the 5. Taking a look at the 1 minute, we also respected the 1 minute bullish fair value gap here from 3:06 AM. Well, it's a potential entry opportunity. Opposite end of the range. 5 points. And now we have a 15 and 5 minute inversion fair value gap here. We could also try to play the midnight level, but I think that I should just do right. If I see a close below the midnight level, this would be my invalidation, my early exit. Really, I don't have to give it 2.5 points here. I'm gonna give it max 1.5 points. This candle slow. Let's see if I can take that before we continue higher. And before we take out buy side, of course. trying to go with the flow here during London Killzone. Pre-London open setup. Pen is ready. 2 a.m. $10. And let's see if in hindsight I could have done anything better, like giving it more room to breathe, like H. Smith often says. Yeah, just to break that down. It's like consolidation. Don't want to get trapped inside of that consolidation. You can see that clearly. Following the consolidation pattern, we look for, after buy side, we look for sell side. So it wasn't really worth for me to use a 2.5 point risk. That's where I got out with a now $84 loss based on $9 commission and 62. What's your thought process behind it? Midnight level rejection, gut feeling. Okay, so you've already been short on NQ, but you stomach the drawdown to get out with 1K. Alright, I understand. That's a different approach. It's okay. Profit is profit. You manage your risk well. You gave it some room to breathe. I hope that didn't trigger any intraday drawdown stuff on your, I think that's your funded trade day account maybe. So 2 trades already for me during the London session. If I take a third one, it better be a pretty damn good setup. Don't see it yet. Don't want to really get involved inside this area again. Like we spoke about it yesterday, H. Smith. After dancing with ES for a while, you just get to know its move and its behavior. And I'm not allowing it a big margin for error, so every time I have my stops in place, I place at a reasonable place, and if I move them to break even, it's also reasonable prior to the market open. So yeah, I have my expectations, and when ES is dancing with me and she's misstepping, well, she gets kicked out. No margin for error. First entry looks more like a continuation / FOMO entry. short. We fell short of our stop loss by 1 tick. That's what happens sometimes if you don't move your stop loss. But I would say it's the rare occasion. If we get this low volume, small range price action prior to the London Open, it actually stops before taking out buy side and then reversing. No, it's alright. Now we have a inversion fair value gap here and a inversion fair value gap here. Do I want to get short and target Asia sell side? Nah, not really. And if so, from where would it make sense? VWAP, new week opening gap, 2-point stop. Let's try that. So now that we're below all this stuff, I don't really, if I'm getting short right here on the medium rebalance, VWAP, new week opening gap, inversion fair value gap here from the left, I don't want to see price moving all the way back above that level. If I see it retrace back above the midnight level, of course we could hold resistance in this fair value gap, but yeah, that's not what I'm looking forward to. So we just tapped the entry, but I didn't get filled. Sometimes they're a little bit too precise. Not what you want to see once we take out sell side. Still respecting this inversion fair value right side. Our pre-London Open to AM 2022 model didn't work. So good call getting that out at break even. We would have at least secured one partial without using a break even method. But a partial right here and a stop right here. Same end result. We would have ended up at break even without any profit. The only thing that would have been avoided would have been a potential long of this inversion fair value gap right here. After showing some strength to the upside, dip down, now move back up. Interesting, it could be a unicorn. High, higher low, higher high, lower low, higher high. So let's see. Didn't respect any of that consolidation range internal fair value gaps at all. We're being honest, equal on sell side liquidity taken, major sell side is still in place. And now we're pushing. There goes in Q. He is 1 minute time frame. Trapped enough traders short, target drawn liquidity, previous day's high. Highest stop closing candle right here. Bullish volume imbalance, that's what we would anticipate if we continue to see bullish order flow, maybe even into the previous day's high. Risk getting in on that volume imbalance. The 15-minute time frame, not closed yet. Yeah, just never-ending job. It's okay. Happens. At least we didn't do too much damage on our account. We tried 3 times. We're only down less than 0.25% based on our equity. I think that's can be noted down as pretty good risk management. 2 points, that's 2 points, 8 ticks times 12.5. Let's say that's $100. Minus $100 on this trade. 1.5 points, that's 6 times 12.5. That's 75. So I can keep my losing trade small and my winners big. This would be an aggressive entry up here. Just entering based on this volume imbalance. Continuing with bullish order flow, target to previous day's high. I considered it, I played with the thought, but not worth the risk, especially after those 3 small losing trades inside the range. In hindsight, could have been avoided. But well, in hindsight, we're always Einstein. There goes in Q. Took out Monday's high now at the high of the week. Yes is following that sharply. EU kept holding the breaker block. Drawing liquidity up here. Sessions so far this week. I thought bird time is the charm. aggressive entry. And everything, and I like to look through it. It's like my little girl's journal, just for trading. Keeps me from over trading, doing anything silly. Most of the time, sometimes it still slips through. 15-minute time frame closed. Into any of these, if we're being honest. Of course we could just use the highest one, like we tapped it already right here, to continue higher. So if we want to get in on this potential move, that would be my minimum entry. Like I said, the aggressive entry, volume and balance remained open. Bullish fair value gap, a huge bullish fair value gap. Not going to chase that. Those aggressive entries, I tend to take them if I haven't had a trade before, and that's the best opportunity that I saw. That's actually great study material to learn from. Getting chopped around in a roughly 5-point Asia range. It's usually not my specialty, my everyday business that I do. You can really see how most of the times, even if I get chopped around, that's the interesting part about it, is I might be wrong one time, get stopped on a break even, a second time, and usually on the third time I'm right. In this scenario, time was wrong, and it didn't give me this aggressive entry up here, and I don't like that, especially after taking 2 losses, small losses. Even though I'm down a little bit, I'm pretty happy with my effort this morning, and that's what's most important. Just this buy side right here. Let's look at the 15-minute time frame and compare both. drawdown. Get in and out quickly. Last trade for me today. I place my limit order right here on the breaker block. Target the draw on liquidity. 2.5 point stop. Well, 125 from the 187. I'm already down. Let's think about it for a second. Let's think about it. American bra size for larger breast. There, we just have to pull a share value gap, might still end up holding support on this volume imbalance. Yeah, I think I'm gonna call it a session. What's the time? It's 9:52. Getting early to call it a session. 3:50, 4 AM, so we're inside the macro now. 1 minute time frame. Float this bullish share value gap right here. The next bullish share value gap on the 1 minute will come in right here. That's where I take my entry. 2.5 point stop. Yeah, I take the risk. Be more of a swing trade compared to what we did here. Previous day's high, highest bearish share value gap here on the 5-minute time frame before that. For now, general practice. Traders would know it means drawdown, but everyone else would think it means double D's. Yeah. I hate double D. Yeah, okay, now I get it. Euro FX futures. So you're looking forward to take a short, if I see that correctly, on EU. Short. I could see that happening. What's your thought process behind it, if you don't mind sharing that? I can see parts of it from the analysis. Structure shift down. Asia lowest resistance. 15-minute inefficiency below midnight. So let's pull up the 15-minute. Yep, I see that. Breaker block, we hit the breaker block. The closer we lower it, 15-minute inefficiency. Equal low sell side below, or sell side below, also with equal lows, taking out the high of the week, previous day's high. Setup. Good spot. Break up right here. to 50% heat level here. Check that off there. Let's keep an eye on that. Nice setup. Where's your stop and where's your target at? So I guess the entry happened right here on the breaker. Stop. And my 1-to-1 wrist reward. You can see it on the paper. Okay, I see. So you already tracked your stop, I see. And your buy limit is going to be right here at those two relatively close. Alright. To get out of the short at 109.840. Right here. Drop it down to A5. The only thing that I wouldn't like about, well, I mean that trailed stop is the potential free push pattern. First push, second push. We already failed to make a higher high right here, but we could see a third push. We have equal highs above. I'd say with the tail stop you should be fine. Leave it like that. It's just my thinking if I look at 1 minute 10 but we kept respecting that volume levels here with the candle close. Should have checked out ES 355, so the new hourly candle is about to drop in 2 minutes. Little excursion to EU here, little field trip. Check out the 15-minute here on ES. 15-minute inversion fair value gap right here. Already filled in. So let's see, 12 seconds on the new hourly candle. Gonna scale into this trade. Promise myself not to be too afraid. Unless this has been an entire fake out and we reject, well, gonna accept the stop. Otherwise I'm gonna get back to break even for the day, taking a 5-point target. Break even would be $200 of profit, 200 divided by 12.5 is 16 ticks. This would be my break even level right here. Break even level and 5-point target. Volume imbalance, bullish fair value gap. We get that 15-minute inversion fair value gap from the left. We don't need those lines in our chart. Understanding we can retrace deeper, we have our breaker block here for a continuation setup. Get rid of this. Push it on the 15 minute. You open with a nice volume imbalance here. The last level of defense, I'd say, would be a potential breaker block here. We swept the low with the London open. Not so side table, short-term low cleared. Tiny. Market structure shift bullish here. From highs and lower lows. London open sweeps. Inbound to the upside. Maybe the setup has only been put in place to retrace back into a bigger picture breaker block for a continuation. I would put stop above the VWAP. I expect the bearish early gap to hold, so above that London is weird, not used to price action, a bit more mellow. I fat fingered the short, no joke man, 14 contracts by short entry, 14 micros only these. That's your 250k account. Okay, maybe on a 250k account that's a different pair of shoes. Not used to 250k accounts, 14 mini contracts, it's crazy. So let me quickly channel my second entry. close right at the low of our bullish value gap, looking good. Looking very good. I like that, having different types of traders in the community where we can like have a constant discussion. I think that's for the benefit. It's better than sitting in front of your chart all by yourself. And like, I don't know, it's always good to get some feedback on some trades you take and see a different perspective. Sometimes half awake leads to less thinking, and less thinking leads to more profits. Because the more we think about stuff, the harder it gets sometimes. The DXY has given me with EW. I used to trade Elliott wave on crypto, on Bitcoin mainly, and yeah, on its own, it's tricky. But there's confluence. Well, the more confluence we add, well, I'm a fan of keeping it simple, really. Well, maybe not everyone would agree with that. Seeing me getting down into all this ICT stuff and here, SMT divergence, sweep, unicorn setup, 2022 setup, fair value gap here, volume imbalance there. Yeah. Well, I'd say from my perspective, it's simple thinking. Okay, following order flow. Still happens that you end up taking losses. I mean, same goes for Elliott wave or any other strategy. This way, it makes sense to me. And it doesn't matter how trading in the end of the day makes sense to you. If it is adding 20 confluences on top of each other, might it be a stochastic RSI crossover, RSI divergence, EMA bounce, Elliott wave, confluence with that, trying to stack as many confluences as possible before you actually take an entry. Because you want that, good confidence in your setup. Just fascinated with it, but ICT has given me, after I've seen you putting the puzzle together for me, much better results. That's great. Hoping long yes is getting trapped. Well, potential is there for M formation. Let's take a look at NQ. NQ is looking not like it wants to continue higher, with EU continuing 5-minute time frame. Still respecting the low of that fair value gap, but I'm not sure about EU how that usually plays. New markets now. Mitigation. that I was able to put the puzzle together to you. Regarding ICT concepts. It's a puzzle with 10,000 pieces, and it's all blank most of the time. All trading is overall. Tried to look at DXY and ES confluence, but I stopped doing that. It's too much. Keep it simple. Going with the flow should allow me to tell me what market makers the order flow right now is up to, which state we're in, without having to use external confluence. I think it works really well if you trade Euro-US dollar forex currency or the FX pair. Definitely, because there we really see that almost perfect correlation. Like DXY goes down, EU automatically goes up, or vice versa. Unless it doesn't, then we know, okay, either of them is likely being manipulated right now. Okay, then we understand. We try to make sense out of the manipulation. Is the manipulation at the high or low of the day? Do we have a decent high probability setup paired with that potential manipulation that we've spotted? DXY making a lower low or EU making a lower low while the DXY is holding a higher low. Alright, what's up here? Like, manipulation on DXY took sell side, shifted structure, fair value gap entry. Alright, nice. But with DXY and ES, I mean, well, that drop shouldn't have, or that pump shouldn't have happened right at 330, comparing that to EU. 330 on EU. Oh, well, maybe a tiny little move. 3 AM. It's not perfectly correlated, and for me there's no point in going for correlation where sometimes it does, sometimes it doesn't. It doesn't help me too much with confluence. Smith, shut up. Not tolerating that. But of course, I hope you get out of the position. ICT was too much waffle for me to fit the important things out, but brilliant guy. Yes, definitely, brilliant guy. Can't deny. On many different levels, I'd say. Being able to grab the entire trading community and become one of the biggest YouTubers or trader influencers, whatever you want to call it, in the industry, selling or making millions, selling your mentorship. That's it's not the easiest thing to do, let's say it like that. Right time, right place, maybe. And it just, created the brand. And that brand went off. You have to give him props for that. Making millions or more than ever made trading. steady extra income while doing something good, helping out others. In the best case scenario, I'd say, like seeing those messages where you say like, okay, me putting the ICT things together for you, that's really what I needed to do. I learned it and I felt confident enough in sharing that knowledge in exclamation marks. But yeah, those two reasons. Sometimes, let's say those reasons are unbalanced 50-50. And some gurus or profitable traders prefer or have more focus on the money-making part instead of actually helping traders. That's what I think what most of the time you end up getting if you buy a pre-recorded PDF course, PDF and video recordings. I mean, it's good if you are a beginner, but if you already spend your hours in front of the charts and you know the stuff, then most of the time it's not about the course you end up buying, it's about perfecting your live executions, your risk management and all that stuff. And this stuff is learned best by watching someone else do it live, in my opinion. And it's not just small ICT YouTubers or smaller YouTubers, it goes up. Even 80-year-olds right here, Jim Dorton, worked at the Chicago Board of Trade, Chicago Mercantile Exchange, all of that. And yeah, I mean, meet Jim, experienced trader, 80 years old, and he's selling a course as well. Not a very cheap one, pretty expensive, but well, he's got the reputation, let's call it that, reputation. Imagine selling just 10 of those per month, that's a good steady income next to your trading. And ideally you help traders with it. I bought the course and I have mixed feelings about it, but I don't want to talk about that. But you get the idea. It goes from super small YouTuber with 10 subscribers to 80-year-old trading veteran. One thing people don't appreciate is a great product when it doesn't cost them anything. Like, for example, what? H. Smith. It's a cool bait magnet when in the clubs. Well, H. Smith, it's at least a conversation starter. But most don't have a broader horizon than my 32-inch screen. Just talking from experience here. Right, so I'm at the break-even level, or some things at least. 5 points is actually above the previous week, so I guess I made a miscalculation here. Not at my break-even level yet. So we'll stop. No, I'm not gonna be greedy. 4.5 points, and therefore break-even, so no limit. So we'll stop. Where's my stop? times 12.5 is 212, and I end up with $50 in profit. Can be content of that. No need to go for a breakpoint. If when the information is free I don't appreciate it, yes, is skiing on that line. Our break-evens are even more short. But what information is free? You're relating that to ICT's YouTube, the 2022 mentorship. I think people appreciate it, but well, studying marketing and all that stuff, it's just brilliant. Like, guy, perfect time, audience was there, explaining them why they get stopped out and why they fail as traders, because it's the algo is the big enemy. Really gets you, I want to understand the algo, okay. You've got them already on the hook. And then initially he had his paid mentorship, alright, that ends after a while, 2 to 3 years, and then he decided to, okay, how can I get even more traction, and then re-mentorship. Like, okay, now you are portrayed as a very generous human being, giving away your knowledge for free, valuable knowledge. Get even more traction. A big YouTube following, lots of YouTube income. No need to sell the mentorship anymore, and deciding then, because of the revenue he made from just publishing the 2022 setup, publishing his entire paid course that's not being used to generate any active income anymore because the course is done. So now he basically has people will watch it in 2024, 2026, maybe even 2021, 2022 when he started uploading them. That's a consistent income stream. Yeah, definitely. So, okay, now I get what you mean. If you put out your stuff for free, well, also a psychology thing, you would anticipate a course where you spend 5,000 euros on, for example. Most of people who paid for the mentorship, yes, that's for sure, no questions about that. But well, they got early access and they were able to chat in the forum with ICT. So, yeah, taking it with a grain of salt. And Q also made a higher high, took out the SPY side right here. Yes, didn't hit my profit target yet. 5-point profit target. This is our previous week's high. Ahead of everyone else, but yeah, now to get back to what Agent Smith said. If you put out your mentorship for free, I mean, some people appreciate it, but yeah, psychologically, if you spend big amounts of money on a mentorship, like usually that we think that, okay, we spend much, we also have to learn much, and that might be that last missing key. Most of the time it isn't. In my opinion. Well, I also never paid $5,000 or $2,500 for a mentorship, to be really honest. So maybe that's what I'm missing. But you get the idea. month mark. $200 per month is already dang expensive, in my opinion. Without really being fully able to interact with the mentor in this case. And if he's then also not willing to trade live, showing you the executions at the same time, well, that's the biggest red flag in my mind. Like, usually if you hide your executions, you do that for a reason. I mean, the reason could be, yeah, you don't want traders to simply copy your trades, but, well, the other reason would be you're not profitable, or you're not as profitable as you claim to be. And you always say like, oh yeah, here on my funded account on my third monitor down here that I, for some reason, don't share. I always take the best entries, like yeah, right here, volume and balance. I'm still on the long. Once I see, okay, now I'm taking profit here. I don't know, my draw liquidity, my take profit target is still at that previous week's high, blah blah blah. So always be careful with that. Yeah, definitely. Same goes for me. It's an investment. It's not an easy profession. The skill needs to be developed. The risk management skill we need to develop. It's like, I don't know, sometimes we can compare it to being a pilot or being a surgeon or a doctor. Not your general doctor, but an actual surgeon where lives are at stake. Like, if you make a mistake, and I don't know, that's just what I imagine it to be like you end up killing a father, you see the children coming or like watching you, I don't know, but you have to tell the wife, the family, you're gonna have to have a very clear mind in order to not let that stress you out, leading to make mistakes, because lives are at stake. At the end of the day, it's just another job. The same goes for trading. I don't like to compare it to a profession where a life is at stake, but the emotions sometimes can be compared that Alright, we come right through the previous day's high here with a very strong close. Next strong liquidity right here. We're still in the Killzone. I'm gonna call this a stage split. You're still in the short. Well, like you said, Frank, don't mind spending money on trading. Same thing for me. I mean, there's some people who don't like to spend the money on investing themselves. Well, ideally, if you do the correct investments, then all you do is you end up saving time. Maybe not with every course or mentorship you purchase. Eventually, you will find one. You learn something. You might not copy the exact way or system that the trader is using, but you pull a few things left and right, mix it up, and make a system that suits you from all the different courses and things you've learned. Because you're not trading like I do right here with small risk management, but you took certain like things or maybe some reasoning, some thoughts, some a thinking pattern away from what you've learned in that single month, I think that's worth it. There we go. Putting ICT concepts together. Checked off the volume imbalance here on the 15. Always nice to see that precision also on other pairs. Don't have another inefficiency since London Open, the only inefficiency where I would put less weight on. Volume imbalance. So that checked it perfectly. Gives me more confidence that we continue now. Where was your initial stop loss placed at? 20 pips. 21 was stream out. 22 pips. Adjustment. We already took that buy side. I like to keep it turned on. That's with the December contract. So let's see if we can follow price action here. This would now be an inversion for value gap. What's the time? 10:36. I'm done for the session, that's for sure. My entry came in right here at the low of the volume imbalance. That's 4 points and a quarter. That's a total profit of, I think 200 bucks. 17 ticks times 12.5. 212.5. What else would be interesting? 5 points would have been hit as well. Yeah. Just as a little note, ran 5 points. Those 3 ticks above the previous day high usually get hit anyway. Ran 5 points. Recap of the London session, up 25 bucks. Okay, perfect. London is journaled. Close that. And sometimes I turn on the bid and ask lines. Well, yeah, I guess. But why do you do that? Huh. 30 pips, but my target is not fixed, as the XI will probably go higher. Move the target to last week high, which match a 4-hour fair value gap. But do you see how insignificant that, let's see, DXY, okay, target would have been hit, 30, right here, from the entry, 1.3 risk reward. It's not fixed, take some partials. DXY likely to continue higher, yeah. But really seeing the DXY continue higher and seeing how EU reacts to that London session for the DXY and seeing that ES is going up higher with the DXY just proves to me that using the DXY as constant confluence on what ES is going to do doesn't make sense. With EU, definitely. I mean, let's pull up that 15-minute time frame on the DXY. Asia session low, new day opening gap. We retraced. Well, EU went lower. Then we went sideways while EU went sideways. We got the 2 a.m. London Killzone open or Frankfurt open. German market makers, I guess. 2 a.m. drop to the downside. Boom. Will be tricky to draw the breaker block here on the DXY, but we get the idea. Perfect correlation. We fill in the fair value gap again. Same here. And continue to move away from that. No, yes, didn't take out Asia sell side. I was looking for that, so if I turn on my executions, full transparency like always, I entered short. Right here, based on this bearish value gap, targeting this equal low sell side and the Asia sell side because it was a really small stop. Right here, my average entry came in. One contract was filled right at the low of the fair value gap, the other one right at the high of the fair value gap. So to that equal low sell side, only 2.5 points. Could have taken partials, but well, not even a 2-to-1 risk reward. Well, for that first entry, it would have been a 2-to-1 risk reward, so I'm gonna add that to the journal. That especially since it's pre-London Open, could have taken a partial right here if it would have been filled. Lots of ifs. For the second contract, I could have moved the stop to break even, targeting Asia sell side. But overall, I don't think I made any major mistakes here. Whatever I would have done, maybe ended up with $50 more profit. I Didn't lose anything at all on the setup after, okay, 255. Potential is still there. Unfilled volume imbalance, holding resistance, but London Open didn't play with that. Decided to move up high without taking out this buy side. So I would deem this as engineered liquidity when I entered based on this inversion fair value gap here on both the 5 and 15-minute time frame. So I tried to enter long, got stopped out immediately with a 1.5 point stop. Looking like, okay, we might actually continue into Asia sell side. Not sure if we're gonna go up. We don't have that information yet. Right now, order flow tells me bearish. We get in short, but get stopped out right here for a 2.5 point stop, I think, or a 2 point stop. And then we got like, yeah, the market showed its hand. Consolidation, SMT divergence with NQ. Expected, well, if we expected or not expected doesn't make a difference. I got in on the volume imbalance right here because I felt confident enough in bullish order flow, confident enough that this is our drawn liquidity, the previous day's high. Now that's the target. We fell short of that. This would be what I consider a silver bullet entry right here. 5 points into the drawn liquidity. We swept the 15-minute low, hit the 15-minute bullish fair value gap and moved away from that. The new hourly candle opened up bullishly. All good signs. I was willing to add right here on this unicorn setup. Why is it a unicorn setup? We form a higher high, higher low, higher high, higher low, higher high. Leave behind all these equal lows. And we break structure here theoretically, just looking at that market structure if I paint it here. So higher high, just looking at the bigger picture, not looking at this internal, what we're doing inside. Higher high, higher low, higher high, higher low, higher high, lower low, higher high, for the continuation up higher. So yeah, nope, had only one contract, but moved my stop regular. Look at the DXY. So we now hit this equal low sell side right here on the 5-minute. And those two equal lows as well. Decent drawn liquidity. We're back closer to our previous... it's Wednesday. It has the potential to be the high of the week. That's when I like to, yeah, to have the freedom, at least, to take partials. And maybe let some of it run until the end of the day. Wednesday, high of the week. From the high of the week, took out the previous day's high. We spoke about our daily drawn liquidity being this high right here. We even hit this daily bearish fair value gap above. Bearish fair value gap, and let's turn on that consequent encouragement or 50% level. Rejected almost to the tick of that 50%. And where did that happen? Now we break it down to the 5-minute, right here during Asia. We take the higher time frame breaker block setup, right here, higher high, higher low, higher high. We break that. We reject from a higher time frame point of interest, take out higher time frame buy side liquidity. Perfect entry, very precise, into sell side. And that might end up being the high of the week. Might. Nothing's ever guaranteed, and that's why I like to have the option to scale out of the position sometimes. Especially if we're looking at high of the week, high of the day setups. So let's take a look, measure our weekly range from Monday's low to this high. The 50%, we almost perfectly bounced the PD array, the weekly PD array right here. 50% consequent encouragement. Clean. Very clean. Daily buy side. Liquidity. Weekly target from the weekly outlook. We hit that, continued higher, took out the previous day's high right here. Yeah, I'm starting to like EU more and more. And why am I looking at EU and not NQ? Well, I'm already trading indices, and if I diversify, I would like to trade a different asset class, Forex in this case. Because ES and NQ most of the time move in tandem. So in a sense, I'm already kind of trading NQ. So if I would be trading both, if I start that next year, after getting some experience in, I could go short on EU and long on ES, and both plays would work out. Well, yeah, with ES and NQ, I would always use the same directions, basically. I don't know. It makes more sense to me to actually diversify and use another. So let's see, I think we perfectly to the tick bounced off this old high. Respected the 50% of this bullish share value gap. Yep. For the continuation higher into our weekly objective, previous week's high. Once we hit that, well, it's 450. We might even hit that within our London Killzone. Let's take a look and measure out our Asia consolidation here and look for standard deviations to the upside. 2 standard deviations of our Asia range. Asia accumulation, breakout, fair value gap, target, right here. 1.5 standard deviations hit, and we rejected, retraced. Pretty nice. Without taking out the Asia sell side. That really would have given it away. If we would have taken that sell side on this candle and then this place to the upside, I would have even entered with more risk. But that's okay. I'm content today. Back to break even. We understand what happened. It makes sense now. And that's really what I like so much about ICT concepts. I'm not saying that it's the only way to make sense out of price action. Whatever you use, basically. Support and resistance. A Fibonacci pullback. We look at our range right here. Expansion to the upside. Get a 50% retracement of this entire move. We place our limit order here. With luck, we get filled. For the continuation higher, targeting potential Fibonacci expansion levels. Can do the same thing for the next price leg. For the first one. Didn't hit the 50% here, but maybe the 38.2 level, blah, blah, blah. We get the idea. Whatever you use, as long as you stick to it and it makes sense to you, just stick to that. All right, my headphones are empty. Gonna charge them up now. Let's see if we have any more questions on Discord. Otherwise, I end the stream and recording here. Yeah. Nice trend. That's when those EMAs are being respected. Very true. Are you using the ICT all-in-one with higher? Okay, that's cool. I like that. Break of structure and all that. Previous week's high. And even the Scalper Pro candle coloring. Let's go. Yeah, skiing that 9 EMA. Yeah, so whatever you use, like, even if you just have that EMA support band on here. Yeah, if we're trending, if you have high conviction that we're gonna keep on trending into a drawn liquidity or a target, because you might not be aware of the drawn liquidity concept, I don't know. Well, two potential entries right here. Instead of using a fair value gap entry, you could have used a Fibonacci retracement entry or a EMA based entry. Doesn't matter. Yeah, so really my takeaway for today, just looking at the executions, good execution right here on that short, got out at break even, perfect execution on this long right here, could have kept on holding, but once I get in the trade, I already have my target, previous day's high is good enough for me. The only consideration could have been maybe a potential re-entry into this trend, continuing to ski that 9 EMA, bullish share value gap whatsoever for another 5-point target, get in on that 50% level, 5 points to the previous week's high. Might have done that if I wouldn't have messed up a little bit in here where I tried to go long and then I tried to go short. That's really, those are the executions that we learn from. Bullish volume imbalance. For an aggressive scalp, we retested the closing price, but yeah, that's not worth it in terms of risk to reward ratio. But it's nice to see continuation up higher, leaving behind those bullish volume imbalances like right here. They tend, if we are in bullish market conditions or in a trend, we keep on holding support on them. Inside the range, well, I also pointed them out. We respect them, but not as well as when we are expanding, basically. Dark theme, yeah, I considered, not considered, I tried to work on a dark theme option for the indicator, but I couldn't figure it out yet. I looked for other indicators on TradingView that might have found a solution to implement a dark theme, but so far I haven't found a single one. If you know one, Agent Smith, please let me know. But if I type in dark theme, light theme, let's see. No, there's no drop down where you could choose between light and dark theme. I'd be interested in that too, because I think it would be a nice to have feature. Some people like a light theme, some people like a dark theme. Being able to simply modify that with a drop down, dark theme, select light theme. Well, there's a solution to it, but it would, like, yeah, I don't know, that would be the lots of work solution to implement that. It's over 2,000 lines of code with so many different colors that you would have to modify based on that. But well, it's possible. I mean, the question is what actually has to be modified by a theme option. The Killzone boxes, I think they should be fine. Agent Smith, if you're still here, if you don't mind, could you write me a list of the lines and all the drawings from the ICT all-in-one indicator that are impacted from if you switch from light to dark theme? No worries. I'm gonna end the recording here. I'm gonna upload it to YouTube now.